Welcome back to this week's review. It was an NFP week, a week where the market opened with gaps, and a quiet week, I think, as a result of those two sort of macro factors. But one trade taken nonetheless, that was EURGBP short, long, I mean EURGBP long. If you follow me on Instagram, then yeah, I told you guys I was on watch post the NFP or the jobs data release, which undershot expectations. So that's obviously an indication that job growth is slowing in the US, meaning the labor market's under pressure. And so gives us an indication as to what the Fed or how the Fed may position themselves in upcoming FOMC meetings, because we know we're in a rate cut cycle. I think there's two cuts priced in for this year. The first tentatively for March, so we could see I think it's a 25 basis point cut in the next in the March meeting, given the slowdown in growth. And so, yeah, not much volatility in the market post that, which is why I was quite keen to still be quite active and pull the trigger. But yeah, that just ended up taking me out quite quickly. And in hindsight, maybe structure had shifted, and I wanted to show you guys that pair briefly, but it was a low risk trade, just to confirm that. And that is week 3 of 4 of phase 2 of the trade building protocol. So I think we just got one more week of that, and then yeah, we'll review how we've done only taking low risk positions. But this was the trade on EURGBP. Kind of just looking at it from a higher time frame perspective, on the daily. It was over the earlier part of January. We got an impulsive break out of this sort of corrective area. Price had been slowing down for quite a while, so we broke higher, tapped into these equal highs, and then we began correcting. And then I saw this now as our new daily range, where we're looking to now come back up into those equal highs. Don't mind these, if you want to know what those are. It's basically the foundations of quarterly theory. It's your EBITDA data ranges. Check that out on ICT's page if you want to see more about those. But then obviously we opened with the gap down this week, continued lower for the first day of the week, and then we slowly started to correct higher before we then got this piece of price here where we really impulsed higher, closed the gap, which indicated that we were shifting structure and establishing that pro trend. And so I was looking for correction to the downside before we then continue higher. And what I like about this is that we did have that commitment. We had that displacement. You see there's the one-sided fair value gap there that we traded into. We've got the order block there. So yeah, there were a whole bunch of confluences indicating that we were heading higher. Looking at the 1 hour, we were trading within this range here. And so I had this fib marked out there, and price was essentially trading around the 70.5% fib level when we pulled back post NFP. But what I realized in hindsight, while reviewing this position, and yeah, shout out to the gent on IG who also commented and kind of showed me where the position may have been counter to what's currently going on now. is that even though we were trading within this bullish range, something I mentioned if you go back to my 1 hour range series is price having shifted structure by the time it gets to the area that we're looking to trade it in. And so we had this impulse lower. You can see we corrected. What happened when we did correct as well, we reached for liquidity to the upside at this point, probably be clear on the 15-minute, but we reached for that and then we displaced lower. You can see with this strong bearish candle. At the point where I took the entry, we had really just swept here. And I think it was the manner in which we were forming wicks that still gave me the indication that we were going higher. But now that this bearish candle is closed and we've obviously invalidated this one-sided fair value gap, that's, more of a sign that we actually have shifted that structure. And although price is still establishing that 4-hour trend to the upside, that pro trend with the daily, I think short term, we're going to get a bit of a correction before we continue to the downside and target potentially that sell side liquidity on the daily within this order block before we then go. And that speaks to, again, not trying to rush those entries at high time frame areas, because price takes a while to eventually start moving. And so my entry was about there. I think it was like 150 pips and it was about 3.5 odd R, it was just above there. It was to these highs here, just above this buy side liquidity to the left on the 1 hour. So yeah, in hindsight, could have placed it below the 1 hour low for more protection. But to be honest, I think that just would have prolonged the inevitable and maybe made me not realize that this was shifting structure anyway. So glad that stops weren't placed so conservatively, because now that I have been stopped out and have a different perspective, it allows me to reposition myself for how the market may distribute early this week. So yeah, that's EURGBP. Few lessons to learn there. But what else did I learn? Learned that it's okay to stay on the sidelines while the market's still developing early in the week. Restraint, something that I'm starting to show in my trading, and that's I'm really glad about that. Or I think it's good to feel like you don't have FOMO, because I think as traders on the path to kind of consistency, you feel like you can't miss out on opportunity because, again, you're looking at every trade to do something for you, to make profit, to pass a challenge, pay a bill. And yeah, when you start to kind of let go of that, it's just become, you stop operating in like this fear-based kind of like mindset when it comes to your trading. So that was cool. Comments on TikTok have me thinking about how I can create content that involves more chart analysis. I kind of wanted to put that back to you guys to kind of see what kind of content you want, whether the stuff I've been posting around the daily nuggets on Instagram and TikTok. If you're enjoying that, or if you want to see more charts, I think it's just trying to find the best way to post meaningful charts, and not just post charts for the sake of posting charts, and then the quality of the content kind of gets lost in that. So still trying to wrap my head around that. And then, if the data ranges and quarterly shifts, which is, just part of month 5 of the ICT core content that I'm going through, which is now starting to factor in time as a variable to determine how the market may behave, um, which is very cool. Check that out if you want to. And so, what is the most important thing I need to work on improving this week? I think it's incorporating the lessons learned from, the ICT mentorship into my trading protocol, because when I do that, that's when I think certain pieces of the puzzle start to um, make sense and start to fit together. And I get a lot of clarity from implementation as opposed to kind of just going through the motions and just learning. So yeah, I really want to consciously do that. And maybe that's how I show you guys more charts and more of the technical stuff is, uh, yeah, teach more of the concepts that, or at least the relevant ones that I'm looking to implement, um, and seeing how, yeah, I can do that. And then what is the most important thing I should continue doing this week? That is showing restraint in my trading. So sitting on the sidelines where necessary and executing aggressively where necessary. Because there are times where you must sit on your hands. But then I think part of the skill you need to develop as a trader is realizing when restraint turns back into fear of execution, fear of pulling the trigger, fear of taking a loss. Because there's times where you kind of just need to be on it and you've got to take trades and the market is moving. So yeah, I think just being able to determine what the environment is and how you should behave is a really powerful skill or trait to have as a trader. So down about 0.5% for the week, with that one loss taken on Friday. Alpha Capital account, same start date, same account stage or phase, same ID, all the same. Um, that's just for the transparency. So remember, guys, consistency is a choice you make. You start doing the things you know you should be doing day in and day out.